So we'll be going over IRS Form 8546, Claim for Reimbursement of Bank Charges. So this is a relatively new tax form. It was released in November of 2024, and when I was looking for prior versions of this form, I could not find anything on the IRS website. So basically, this form is used to submit a claim for reimbursement under certain bank charges that may have been imposed by your financial institution, but were caused by IRS mistakes. So there are certain categories that specify this, and you can find more information on the back of this form under Internal Revenue Policy P-5-39. But before we get into the form, we'll break down exactly what circumstances you can request reimbursement for. So there are three broad categories of bank charges that the IRS will reimburse you for. So the first one would be any charges due to an erroneous levy of your financial assets. So when it comes to IRS levies, the banks do have permission to apply any applicable charges that may be imposed in addition to the levy. So if the IRS sends a notice to your bank that they're going to levy $10,000 out of your bank account, the bank can impose its own processing fee on top of that. Now, if that levy was an error and the IRS should not have levied that, and you eventually get your money back, you can request that the IRS pay you back the associated bank charges. So if it costs an additional $100 to process that, this is the way that you would be able to get that reimbursement. If the IRS lost or misplaced a taxpayer check, so you send a $1,000 check to the IRS just lost your check, not a check that was lost in the mail, but a check that the IRS actually received and then told you got lost in the system, then if you had to place a stop payment on that check, the IRS will also reimburse you for that as well. And then finally, if there were processing errors that the IRS committed as a result of an installment agreement where you requested direct debit, that would be a request on either on the IRS website or on IRS Form 9465, which is your installment agreement. And that caused bank fees to occur, you can get reimbursed for that. So this is the section that talks about it. We'll circle back to it once we've gone over the form. But those are the only three categories that the IRS recognizes as reimbursable bank charges. So again, an erroneous levy, stopping payment on a check that the IRS lost or misplaced, or a DDIA, a direct debit installment agreement processing error that the IRS committed. So there are extenuating circumstances, and we'll go over that in a little bit more detail. And we also do cover all of these kind of background facts in our article, which you can find on our website. So if you go to teachmepersonalfinance.com, type in IRS Form 8546, you'll see the article appear. We'll also put a link to the article in the show notes. So if you need to break this down, what we've done in the article is we've broken this down into three sections. So the top part isn't really clarified as taxpayer information, but that's basically what it is. It's fields for taxpayer information, who's filing the claim. The middle section is for EFT information, and then the last part is the certification where you and either your spouse or your business partner would sign and date the form. So all of this is fairly straightforward. At the very top, you're going to put the name and the address of the claimants. So in this case, John Doe is filing a claim on his own behalf. In item 1A, he'll put his address. Actually, items 1A through D, address including city. This is a drop-down box for the state and then the applicable zip code. In item 2, you'll enter the telephone number, followed by the best time to call. So in this case, John Doe wants to be called in the afternoons, and the amount of the claim is $500. Now, the form does state that the limit is up to $1,000, and you have to make the claim within one year of the date that the claim accrues. I couldn't find a whole lot of information on what that means, but I would assume that that means, 1 year from the date that the charges are applied to you. So, as I mentioned, this is a relatively new form, so there's probably some detail that you could get from the IRS, but I would caution you to err on the conservative side and process this reimbursement claim for reimbursement as quickly as possible. In item 5, you're going to enter your social security number. If this is for a business account, you can enter an employer ID number. It says voluntary disclosure. However, if you if you don't put this information here, then you're probably going to have a delay or in processing your claim, or the IRS might not be able to find your records to assert the claim itself. Under the EFT information, this is pretty straightforward. Bank EFT transfer info. So John Doe's name is on his account. This ABA number, which until today I never knew stood for American Bankers Association. It's also your 9-digit routing number. It's a 9-digit number. It's the number that's on the lower left-hand corner of your checks, and that is the unique number for each financial institution. So if you look on your checkbook, if you have one, if you don't, you probably have a mobile app. You can pull up your relevant banking information on your app or your online account. You could probably contact your bank if you don't have access to any of those. So that's the 9-digit number. We'll enter the bank name and address. You can use your local branch. You can use whatever branch address appears on your account. For example, I use USAA, which doesn't really have any local branches. So I would use their San Antonio headquarters address. In item 9, you'll put whatever your bank account number is. If it starts with a bunch of zeros, you can leave the zeros out, generally just the bank account number. And then make sure that that bank account number matches the type of account. So if you have a checking and a savings account, make sure you're using the checking account number. If you selected checking account, use the savings account number if you selected the savings account. And then you should understand what the reimbursement is for. Again, an erroneous levy, most taxpayers are going to know when a levy has been placed on their account, because there will be a ton of money missing from it, and your bank will gladly tell you that they were following instructions from the IRS. Stopping payment, again, you should probably know whether or not you stopped payment on a check. So if you incurred a $50 fee or whatever the stop payment fee is, then that's what you would select here. And then if you requested a direct debit installment agreement as part of your IRS Form 9465 or your online installment agreement, then you would use that section here. In item 12, you'll enter a description of the claim. You enter as much information as possible. There's really not a whole lot of guidance in the form instructions, so I just insert explanation here. You can attach additional sheets if you want. You will also have to attach verification of the account that you're claiming. So you would include any documentation that you have. So specifically any IRS correspondence, make sure you use copies. Keep the original IRS documents for yourself. So if you have copies of the IRS acknowledging that they levied your account in error, if there's a correspondence saying that they misplaced your check, or if then you would attach that verification to this. You can describe or enter in the description all of the documentation, and I would describe the documentation. That way, if it's missing or becomes separated, then the IRS agent knows that they should probably contact you to get a copy. So if you say that this was an erroneous levy and you document that you've included a copy of the IRS notice with the erroneous levy, if you've included bank statements that show the charges by that levy, and then you show the records that you paid back the charges, but the IRS agent can't find any of it, then they know they should probably contact you to get that information. So maybe it fell out of the envelope, maybe it got lost in the mailroom, but at least they'll know to do that. So there's similar guidance for each of these different things. So if it's not an erroneous levy, it would be the stop payment, providing background information on, that stop payment because you received a letter from the IRS saying that they lost or misplaced your check. And again, to reiterate, this is not a check that got lost in the mail or by FedEx. You would have to go through those outlets to get that, to see whether or not you could be reimbursed bank fees. This is literally only if the IRS sent you an acknowledgement that they lost or misplaced your check. And then finally, the direct debit installment agreement. Very similar things. So all of this information, we broke it down into a little bit more user-friendly format in the article. We also answer some frequently asked questions, like, do you have to have EFT? No. You can simply leave items 6 through 10 blank or enter none. Technically, you're supposed to enter none in any blocks that, if the block does not apply. So if you had, let's say, if you, had none, if you wanted to enter NONE on because you want to receive a check, you would enter NONE on all of these items. Now, the IRS highly recommends that you use EFT because it's faster, safer, and more convenient for most people. But you can request a checking account, or you can ask, to receive a check. So there's a little bit of background information on each of these, in erroneous levy cases, in lost check cases, in all DDIA cases. And again, they're very similar pieces of information. They're just unique to each of those scenarios. So, and then you sign and date the form. If you have a joint owner, whether it's a spouse or a business partner, both claimants need to sign this, particularly if it's a joint banking account or a joint tax return that you're talking about. So if there's 2 or more people, or if there are 2 people, both claimants need to sign and date this. So the last thing I'll point out is the civil penalty is clearly explained here. I'm not sure the difference between a civil penalty for presenting a fraudulent claim and the civil penalty for presenting a fraudulent claim or making false statements, but the fraudulent claim is cited as $2,000 plus 2 times the amount of damages sustained by the U.S. government. So I would interpret that to be if you request reimbursement for $500, the U.S. government sends you a check. They come back later on and find that you committed fraud in doing that claim. They can fine you $2,000 plus 2 times the $500 for a total of $3,000. Over here on the right-hand side, there is a statute that limits fines. You can be subject to imprisonment, up to $10,000 in fines, not more than 5 years in prison, or both. So, tax fraud is something that, you can commit even if it's not on your tax return. So technically it's committing fraud in anything that you have related to taxes. So again, we'll break down this form in more depth in the article. So if you need to go step by step, check out the article. We'll also put links to resources about articles and forms. We'll put links to resources, specifically articles and videos about forms mentioned here in the show notes. So if you have an additional question, you can check out those resources as well. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if you'd like to see another topic in an upcoming video, please hit us in the comments section. Thank you very much and have a great day.